Welcome to Explain the Charts, where we break down the markets for you. Today is February 25th, 2025, and we're taking an in-depth look at the SPY, the S&P 500. Recent headlines point towards uncertainty in the market, with conflicting reports of gains and losses. President Trump's renewed tariff threats are causing concern among investors, particularly in the technology sector. This uncertainty is reflected in the recent three-day drop, the biggest since insert date. Let's turn to the charts to see if we can find some clues about what might happen next. First, we'll examine the daily chart to gain an overview of the longer-term trends. Looking at the daily chart, we observe a recent period of consolidation between approximately 420 and 450. There's a clear downtrend from the recent high around 470 towards this consolidation area. It seems the SPY has been struggling to break above the resistance near 450. However, we can see signs of a potential reversal in recent days. The increase in volume indicates a heightened level of trading activity, signifying a shift in market sentiment. Let's switch to the hourly chart for a finer look at the recent price action. Examining the 1-hour chart, we can clearly identify support around 598 and resistance near 605. In this zoomed time range, we can see recent price fluctuations contained between these two levels. This is a critical zone to watch, as a breakout above 605 could signal a renewed bullish trend. Conversely, a sustained break below 598 could lead to further declines. The 15-minute chart provides an even more granular picture of the recent price action. The 15-minute chart reveals short-term volatility, with some price fluctuations in the last few hours. The current price is around close to the lower end of the 1-hour consolidation range. Given the recent news and chart patterns, I would lean slightly bearish in the short term. However, the long-term picture remains uncertain. A breakout above the resistance could cause a sudden change in direction. Let's recap the important price levels and potential predictions. In the short term, support at 598 on the hourly chart is a crucial level to watch. A break below 598 could lead to a further drop towards 580. The likelihood of this happening is moderate, given the current market volatility. On the upside, a break above the resistance at 605 could trigger a rally towards 610. The likelihood of this is also moderate, dependent on positive economic news and investor sentiment. In the longer term, the 420 to 450 area identified in the daily chart acts as a significant support zone. However, this is a prediction made with low certainty, as events could drastically change this forecast. Overall, the market remains uncertain. We've identified critical short-term support and resistance levels that need close monitoring. It is likely that these values will change, and new levels may be established as the market reacts to future news. Keep an eye on any significant economic data or geopolitical events that could shift market sentiment. Remember to conduct your own research and consult with a financial advisor before making any investment decisions. Thank you for watching Explain the Charts.